Hi everyone, good evening. As promised, I have here a video of the basic tax of an individual taxpayer that you can go over and study for your upcoming midterm examinations. But before you proceed, kindly download or open your copy of the National Internal Revenue Code as amended by RA 10963 or the Train Law. So under the amendments in RA 10963, there are four types of individual income taxpayers. We have compensation income earners, self-employed, professional, and mixed income earners. So, Revenue Regulations number 8-2018 provides the following definition of terms. So for compensation income earners, are individuals whose source of income is purely derived from an employer-employee relationship. There is an employer and employee relationship when a person for whom services were performed has right to control and direct an individual who performs the services. Self-employed. Who are self-employed individuals? This refers to a sole proprietor or an independent contractor who reports income earned from self-employment. He or she controls whom he or she works for, how the work is done, and when it is done. So it includes those hired under a contract of service or job order and professionals whose income is derived purely from the practice of profession and not under an employer-employee relationship. So we have, for example, consultancy firm and or you open up your own architectural firm. So you will be considered as a self-employed professional. So now, for professionals, this refers to a person formally certified by a professional body to a specific profession by virtue of having completed a required examination or course of studies and or practice whose competence can usually be measured against an established set of standards. So you have, for example, lawyers, engineers, accountants, and technical consultants. And the fourth type of individual taxpayers are the mixed income earners. So an individual earning compensation, income from employment, and income from business, practice of profession, and or other sources aside from employment. So let's go to the computation. For individuals earning purely compensation income, they shall be taxed based on the income tax rates prescribed in under subsection A hereof or the graduated rates as provided below for January 1, 2018 until December 31, 2022. Effective January 1, 2023 and onwards, we have a different graduated rates applicable. But for the purposes of our discussion, we will use the applicable rate for 2019. So now, taxable income for compensation earners is the gross compensation income less non-taxable income or benefits such as but not limited to the 13th month pay and other benefits such as the de minimis benefits and employees' share in the statutory contributions and union dues. So we have here sample problem number 1. Let's read sample problem number 1. Lance, a marketing manager of SMC Tax 101, earned annual compensation in 2019 amounting to 650,000 inclusive of 13th month and other benefits in the amount of 120,000. Let us compute for the taxable income and income tax due of Lance. Okay. Here, his gross compensation income is 650,000, right? Since he earns solely compensation income, Lance is entitled to deduct from his gross earnings 90,000, which is the maximum exclusion of his 13th month pay and other benefits. So even if he has 13th month pay and other benefits amounting to 120,000, what is allowed as a deduction from his gross compensation income is only 90,000. So his taxable income is 560,000. For the computation of his income tax due, we have here on the first 400,000, that is 30,000. On excess of 400,000, so 560 less 400,000, 160,000 multiplied by 25%, so that's 40,000. So his total income tax due for the year is 70,000 pesos. Okay. Now, what if Lance has a wife, no? So, according to the tax code, husband and wife shall compute their individual income tax separately based on their respective taxable income. If any income cannot be definitely attributed to or identified as income earned by either of the spouses, okay, attributed to or identified as income exclusively earned or realized by either of the spouses, the same shall be divided equally between the spouses for the purpose of determining their respective taxable income. Now, what if he is a minimum wage earner who is paid with a statutory minimum wage rates or an employee in the public sector with compensation income of not more than the statutory minimum wage rates in the non-agricultural sector where he is assigned? So, class, as provided by law, he shall be exempted from the payment of income tax. So, likewise, the exemption covers the holiday pay, the overtime pay, the night shift differential pay, and the hazard pay. So we have here problem of Mr. Juan Tax. So Mr. Juan Tax is a minimum wage earner who works for BTS Incorporated. He is not engaged in business nor has any other source of income other than his employment. So for 2019, Mr. Juan Tax earned a compensation income of 135,000 with an overtime pay of 80,000, night shift differential of 30,000, hazard pay of 15,000, and holiday pay of 15,000. His statutory contributions amounting to 5,000 and has received a 13th month pay of 11,000. How much is his income tax due? So, wag na natin patagalin guys. Yung income tax due niya is 0. Charot. Kasi exempt siya. So, even if for the computation of his total income, you only need to add total compensation income and then the other income he earned over during the year, less 13th month pay and the mandatory contribution, with a net taxable income of 259,000. But since he is a minimum wage income earner, he is not liable for income tax. Okay? Now, let's proceed with self-employed individual or professional. If you're a self-employed individual, you should always remember the 3 million threshold on the gross sales or receipts and other non-operating income. This threshold pertains to the self-employed. Okay, so if the total sales or gross receipts do not exceed the threshold, you shall have the option to avail of, so ito, if less than 3 million, you have the option to avail the 8% income tax rate in lieu of the graduated income tax rate and percentage tax. The 8% tax rate is imposed on the amount in excess of 250,000. So RR 8-2018 provides that the intention to opt for the 8% income tax rate must be expressed by the taxpayer in the first quarter income tax return or the initial quarter return of the taxable year when the taxpayer commenced business. Such election shall be irrevocable, and thus the option chosen can no longer be changed. Now, if the choice is not properly made, the individual loses the option to use the 8% tax rate, okay? And thus, they will be subjected to graduated income tax rate. Now, if an individual does not exceed the threshold, certain types of individual taxpayers are still unqualified to choose the 8% income tax rate. Why? Because first, this option is not available to VAT-registered taxpayers and taxpayers subject to other percentage taxes. Second, this option does not apply to partners of general professional partnerships with respect to their distributive shares. And this point is extensively discussed and illustrated in the Revenue Regulation number 8-2018. Now, in case the individual avails of the 8% income tax option, but subsequently earns gross sales or receipts exceeding 3 million, okay, exceeding 3 million during the taxable year, the individual should automatically be subject to the graduated rates and with the corresponding value-added tax. Any quarterly payments under the 8% income tax rate option may be allowed as tax credit from income tax due. Now, if the gross sales or receipts and other non-operating income of the taxpayer is greater than the 3 million, he will be subject to the graduated income tax rate and value-added tax. So, sample problem for self-employed. So here, Fatma operates a grocery store while she offers consultancy services to her clients. In 2019, her gross sales amounted to 800,000, in addition to her receipts from consultancy services of 300,000. She already signified her intention to be taxed at 8% income tax rate in her first quarter return. Question: how much is her income tax liability? So Fatma's gross sale or receipt is below the VAT threshold of 3 million, right? So this is her total sales is only 1.1 million. Since her source of income is purely from self-employment, she is entitled to the amount allowed as deduction of 250,000 under the tax code as amended. Thus, her taxable income is 850,000 and her income tax due, which is 8% of 850,000, is 68,000 pesos. Now, next problem. Fatma failed to signify her intention to be taxed at 8% income tax rate on gross sales in her initial quarterly income tax return, and she incurred cost of sales and operating expenses amounting to 600,000 and 200,000 respectively, or a total of 800,000. Question: how much is her income tax due? Since she's failed to signify her choice, she loses the option to use the 8% rate, and thus she will be subjected to graduated income tax rates. Okay? Total taxable income of 300,000 from gross income less operating expense on the first 250,000, that is 0. In excess of 250,000, that's 50,000 multiplied by 20%, 10,000. So her total income tax due is 10,000. Remember, since she loses the option to use the 8% rate, she will be subjected to graduated income tax rate, and she is also liable to pay for the percentage tax. Okay? So we will just cut the video short, and we will have a second parang tranche of this presentation. Okay, thank you very much, but we are not yet done, okay? We still have the second part of it.